How's it going, fam? Melody Stacks with you guys on another quick lesson. I'm going to go ahead and break down on how it is that you can obtain 5 pip stop losses. Now understand this, that when it is that you are trading, it depends a lot off of the time zone that you are trading. So in this case, we can see that we have the 1 minute time zone, okay? So before we get into like the 1 minute time zone, the 15, the 5 minute, the hour, so on and so on, you want to understand the overall direction, right? And you also want to understand exactly why is that you're taking the potential trade. Now this trade right here was a trade that I personally went ahead and took this morning. I went ahead and mentioned that there was a trade level from this area. So it was about a 5 to 10 pip trade zone where we can see all the way from 1.13420 and up into 1.3463. Okay, so this was a nice trade zone to be paying attention to. I did mention that over to all the members from Stack and Grow from the live session, and also we were able to take advantage of GBP USD sales as well. So we had these nice sales to the downside. Currently in some profits. Hasn't hit TP yet, but at this moment we are already at break even. This one right here was not the greatest risk to our ratio. It's almost a 1 to 3 risk to our ratio. But going on into the Euro USD trade, this is much better risk to ratio, leading up currently into about a 1 to 8 risk to ratio, almost a 1 to 9 risk to ratio. Now, why did I take this trade and how it is that I took this trade? So first of all, let's look at the overall direction. I'm going to go ahead and delete all this information right here. As you guys can see, I had some stuff marked up over here, things I was paying attention to at the overall area. We can see how we broke structure, and I'm going to go ahead and explain all that from the beginning. So let's trash all of this out, and let's start from the daily time frame. Now, going on from the daily time frame, there's certain things that you want to be paying attention to. In this case scenario, daily time frame, what exactly is that we're seeing? We're seeing how the market is creating nice lows, okay, and had previously created those highs. So market is still creating lower lows and lower highs. We can see how market's creating lower lows and lower highs, lower lows and lower highs. Now, one thing that I am paying lots of attention to at this very moment is this right here, how we can see market leave a nice area of imbalance. Now, an imbalance is pretty much when there is insufficiency in the market, where there is only selling pressure or buying pressure. In this case right here, there's only selling pressure on the daily time frame. So this is the area that I am paying attention to, understanding that market has the potential of coming up into that area. Okay, so that's just simply me understanding that market has the potential to come into that area before continuing to the downside. Now, going over into the 4-hour time frame. On the 4-hour time frame, I'm looking at certain scenarios. On the 4-hour time frame, I am seeing and I am identifying how market is maintaining the overall bullish structure. Now, we do see how we had a nice spike to the downside right in this area, but the reasoning to that spike to the downside was also because we had a nice imbalance over here. Okay, so we came down, fulfilled the imbalance, and came right back up. Now, understand that during that push to the downside, there was selling pressure. There was tons of selling pressure, but also there was nice buying pressure. And that pressure you're more likely going to be seen on the 1-hour time frame, 15 and 5-minute time frame. Now, on the 1-hour time frame, we can identify how there was nice equal lows over here that I like to pay attention to. Now, whenever I see equal lows in the market, I consider this as potential liquidity within the market. Okay, so there is some potential liquidity right in that area. Now we can identify how market spiked through that liquidity, fulfilled the imbalance that was on the bigger time frame, such as the H4 time frame, and then came back up. Now we didn't just come up to any specific zone. We didn't just come up just to come up. We came to a specific area in where we were able to identify that market went ahead and created some buying pressure. As we can see right here, we had created some buying pressure, and right after creating that buying pressure, we had a huge sell-off. Okay, now as we can see, market came straight into that buying pressure, okay, around the start of the buying pressure and also around the midpoint of the buying pressure. Now when we came into this buying pressure, we were able to identify a potential distribution where we can see that market had created us some nice equal highs right here. Now we did have that spike and market came back down. So we investigate on a deeper scale these areas. Why is that? Because on the lower time frames, such as the M15, M5, we're going to be able to identify points of interest, right? Now, understand that order flow is based off of where market is moving and why a market is moving when it comes to the reasoning behind it. For example, market's going to buy to later on sell. Market right here went ahead and came into the areas or the positions, I could say, that were previously bought into to later on sell. So therefore, the order flow right now is bearish. We have bearish order flow at this very moment. Understand that we have some bullish order flow down over here, and I'm going to go ahead more in detail on these on my another channel, on the other channel, which is going to be the vlog/education channel of Maori Stacks. The link's going to be down below, and I'll be talking about this very specifically, right? Right here on this channel, I'm going to be going a little bit more as far as the complexity of it. I'm going to be going more into the charts and going straight into the bread and butter. If you want to see exactly the terminology and more simplified, that link's going to be down below. Okay, so right now we can see how market came up into order flow, came back down, and now came up into what? Potential order flow. So that's when we go over into the 15-minute time frame and even the 5-minute time frame, right? We can see how market came into this area, but we can't quite identify the reasoning why. So more than likely in this zone right here, there's going to be order flow on lower time frames such as the M5, M1. On the M5, we can see how we had a huge spike to the upside and then spike to the downside, creating order flow starting from here all the way up into here. But that's not quite the information I want to see. So I want to go into lower time frames such as the 1 minute. Now on the 1 minute, guys, I can see what I want to see. In this case, I can see how market had created nice areas in where order flow could have been created, and now is being rejected off of that same area. We can see how market rejects and then comes back down. Okay, so this order flow is being confirmed, and that order flow was tapping into previous order flow. Now this order flow over here is tapping into this order flow. Now the entry for this one right here, what would it have been? Well, we can see how market had created order flow, market going to the upside to later on fall to the downside, creating the start of the order flow right over here, and creating the mid of the order flow right over here. Meaning that our potential entry, I'm going to go ahead and delete this right here just for now, meaning that our potential entry could have been anywhere between here and here. Start of the order flow to the mid area of the order flow. Now, things that you could have taken into consideration would have been accumulation of price right in this area. We have a nice accumulation of price located in this area in which market was sustained, and from that area we had the market move down. So in this case scenario, any selling positions would have been okay with putting a stop loss right above order flow that had been created and confirmed, which would have been about 7 pips, and TPs always taking out the lows. In this case right here, almost 1-to-2 restore ratio, structure level 1-to-3 restore ratio. And if you decide to take it all the way down to where the expansion had created and started, what would have been down over here, what can we expect? We can expect a nice 1-to-4 restore ratio for that area. Okay, now we're not done yet here. There are certain levels that we want to be paying attention to. We want to see if market's going to respect this order flow. So what do we see? We can see how market came up into that order flow. Okay, now where did this order flow start? We can see how the start of this order flow started from our push to the upside right in this area and push to the downside. So in this case scenario, I'm going to go ahead and see if market came into order flow where it could have been respected in the future for us to take some potential positions. And as we can identify over here, we can see how market comes into that area, creating overall bullish structure. Right here, we can see market creating those nice bullish structural scenarios, comes up, and then right here, we broke structure. We didn't quite break direction until we see the break of this area. Later on, market breaks direction. This is coming towards New York session, and then New York session, we can see a nice little accumulation phase right here. Now, when we identify that nice little accumulation phase right here, that was a simple accumulation phase for it to have strength to later on come up into order flow. Now, this right here could have been a move that could have been taken from previous order flow. Current order flow at this very moment is from here to here. So anywhere between these areas where I identify the start of the order flow, which is the most current order flow, and the mid of the order flow, so start and mid, these are areas that I want to be paying attention to, right over here. These are the areas I want to be paying attention to potentially enter for a selling position. Now, why do I want to enter for a potential selling position? Because from the bigger chart, from the 1 hour time frame, we can identify how order flow is being respected over and over and over, right? Going on to the 15-minute time frame, we can see a little bit more details. 5-minute time frame, more and more details, where we can see most of the entries were placed on the 5-minute time frame. And then finally, right here before its final push to the downside, on the 1-minute time frame, we can identify that very nice order flow being confirmed. Now, me particularly, I'm not going to enter right after order flow. I'm going to enter off a price action, off of something that confirms me that order flow is starting to go towards my direction. In this case scenario, we can identify how order flow started going to the downside by doing what? By breaking a structural level, in this case right here. Okay, so we were able to break a structural level, and I saw the momentum, and I also saw accumulation of price right here. So I ended up entering my position at the close of accumulation of price for a stop loss right above the initial of that move to the downside. So we can see right over here for about a 5 pip stop loss, and currently running at about 48 pips profit so far. Right here we can see about 46 pips profit, leading us into 108 risk to our ratio. So that is how you can go ahead and obtain smaller TPs. Sorry, that is how you can go ahead and obtain smaller stop losses, greater TPs, high risk to our ratios. So by being able to understand order flow is going to give you an overall move as far as where market could go. Understand that order flow also depends a lot off the time frame that you're looking at. In this case scenario, if I go on the 1 hour time frame, order flow is bullish. The 1 hour time frame order flow is bullish. But I entered off the 5 and the 15 order flow because we can identify right here, if I go ahead and delete everything, our order flow, we can see how market has been maintaining overall bullish order flow, where market has come into areas where it potentially respects. Right now we're coming into a potential half zone of this order flow from the 4 hour time frame. Now we go into the 1 hour time frame, order flow is different. The 1 hour time frame, we have some order flow in this area, and we have fulfilled this order flow. So in my case scenario, for tomorrow, I'm going to be paying a lot of attention into these zones right over here to see if we can see some potential moves to the upside. Now, if you'd like to see a little bit more in detail as far as how does that you can see order flow, a little bit more simple, having it more simple when it comes to explaining, feel free to go ahead and click the link down below for Melody Stacks, the YouTube channel, and you will be able to see it there a lot more simpler. But right now, I'll see you guys next time, and I'll be talking about potential imbalance. Let me know what you'd like to see next on the following videos down below. Have a great one. Bye-bye.